for buyers right now, I feel like it's such an easier time, and right after COVID, buyers are really stressing about every little thing. I bought during that time.
We did too.
So did you. We were stressed out. I mean, having to go over asking, no closing costs,
no inspection.
Yeah, waive appraisal,
everything.
I had to negotiate my commission to be either reduced. I think I just voided my whole commission to make it work too.
It was
tough,
unpleasant. It was uncomfortable. It was in business, in relationships, in friendship, in marriage. Everything's got to be balanced, right? Everybody needs to walk away feeling like they won something. During COVID, the only winner was the seller. They won everything
by a margin.
The realtors lost money. The buyers lost money. The title companies, well, they were. Insurance companies were really happy, but
it was so difficult, man.
Buyers were really the ones that were walking away with the kingdom.
Yeah, and I mean, to your point, there's a lot of people that bought in maybe late 22, late 23 that are looking to maybe sell their house for one reason or another right now, and they just don't have a ton of equity.
Well, I've got one that's worse. They
may not have any equity.
He's a doctor, bought a house in a new build community during COVID, paid full price, a little bit over.
Everybody's paying over.
And now that the community is trying to finish out, they're selling his exact same house $40,000 to $50,000 below what he paid for it.
Oh, I believe it.
So now he's upside down $40,000 or $50,000. Yeah. And it's not anyone's fault. It's just, again, when you buy in a market when everybody else is trying to buy, you're going to lose. You as a buyer will lose. Buying now, when there's so few buyers, even if it's a stretch, I'm telling some of my families, look, even if it's the home that you can afford, but it's not the desired neighborhood you want to be in, give it a year or two.
Mm-hmm.
Save your money, be in the house. You're buying, and the money you're saving, not only in payment, but also in those closing costs, you'll be able to recoup when you sell it, because now you didn't have to pay it at all. It's not a loss.
It's hard for people to think about maybe 5-10 years down the road, but they really need to think about that when they're buying a house, especially now, because you're winning when you buy. When you buy low, you're winning.
When I bought my first house, nobody walked me through the process. I fortunately had a financial background. So I did the analytics, I did the long-term costs, I did the expenses, and then I looked at what would my realistic equity gain be, and then what would I be able to sell it for when I sold in 3 or 4 years. Mm-hmm. We ended up keeping the house for 7 years, and we made almost a 60% profit. I can't complain, but I also didn't buy in a market when everybody was buying. Earlier you were talking about...
Well, except that house recently.
Except for that one recently, which still my nightmare that I'm dealing with today.
Yeah.
But on the other side of the coin, I mean, my wife and I sat down in the cold with a fire, and you couldn't even see my nearest neighbor 80 yards away. I mean, and inside the city?
Yeah.
Yeah, it's a trade-off that I'm willing to struggle through. But rates are interesting. Fourth quarter last year, everybody was talking about how the rates were going bad, rates were bad. And then all of a sudden, this last couple of weeks, rates are the best they've been in over a year. And I'm looking at it going,
yeah,
no, they're not. The 10-year Treasury's been rising the last 30 days. And I look at my rates and I'm like, my rates are still the same. I mean, you're talking maybe, and here's a good point to think about. When people say, what rates are you getting? It's what rates are you getting at no cost? And remember, this is the only product when, unlike buying a car, you can't say, hey, let me give you a few extra bucks and give me a better deal on the rate. They don't care. In a house, in that house negotiation, you can negotiate with your lender to get you a better rate, a lower rate. And if you do, then they ask you to pay some extra money. Think of it this way, the lender is wanting some of that interest up front.
Yeah, if you want to explain that and kind of walk people through that.
So let's say Ryan comes in and you've got an 800 credit score, and I say, hey, Ryan, let's talk about three choices. Do you want the lowest rate? Do you want the cheapest closing costs? Or do you want something in the middle? So we look at the lowest rate. Hey, Ryan, I can get you a 4.99 right now, and you're buying a $500,000 home. It's going to cost you about $11,000 for the rate. That's just for the rate.
Mm-hmm.
Oh, you want the cheapest loan? Okay, well, let me get you something like maybe a 5.7, right?
Mm-hmm.
And now the lender's going to probably give you $1,000 or $2,000. And we can use that towards your closing costs. And now the seller's going to pay your closing costs, and so you're coming to the table just maybe with your down payment.
Yeah.
And then we go, okay, well, what's something in the middle? Maybe you have an extra $3,000 or $4,000 that the seller's paying, or maybe you had an extra $2,000 or $3,000 in savings that you really expected to put towards the house, and now you can towards the rate.
Mm-hmm.
So we can look at all those in that third scenario and kind of do the analytics to see what makes sense. You know, you might say, hey, Carlos, I'm only going to be in that house for 3 years. I'm single right now. I'm engaged to my fiance in Dallas. And, in a couple of years, she's moving down or I'm moving up. Yeah, I would say then don't spend any money. Let's take the cheapest loan. Let's just get you in the house.
Yeah.
Why spend that extra money now? Let's use that money that the seller's paying, pay all your closing costs.
And these are real conversations, right?
Every single one's going to be different.
Everybody's going to be different in this
Absolutely.
situation, just like that. I'm sure you have plenty of examples to give. So walking somebody through this process and really dumbing it down for them, explaining it on how sometimes taking a high rate may not be a bad idea depending on how much cash you want to put towards the house. And maybe you don't have to, because maybe we get some extra closing costs to pay for that rate buy down.
I talked to a buddy of mine the other day, and he was bragging about how, when he talks to somebody, they're in and out in 30 minutes. When I'm talking to a family, on that first conversation, it's usually an hour and a half.
Yeah, you really take the time.
Because I think it's important to not only understand what they're really wanting, needing, but also where their life is heading.
A lot of people have a hard time understanding the whole loan process and rate process and rates and the buy downs and how that all works.
It's important to listen.
Yeah, they don't understand it. They don't hear it every day.
If I'm that guy that's bought 7 houses, I really don't need to have the rate conversation.
Sure.
I did the math already in my head.
Mm-hmm.
But if you're a first-time family,
even second time,
and if you're not doing this job every day,
yeah.
Let's walk through that process together. And it's fun because, what we find out is, hey, listen, there's another little path that neither of us thought about. But after we chatted for 30 or 45 minutes, we go, wait a minute, there's a better plan. Let's attack it this way. Mm-hmm. And here's why.
And how many times have you had a buyer come to you and say, hey, I'm talking to this other lender and they can do this. But when you ask them, well, how much is that going to cost you? As far as rate, they might give you a scenario where they can get something in the 4s, and then you ask them, well, how much it's going to cost you? But you're a broker, you get the best rates possible. Right. It's going to cost us some money, but that other lender's not disclosing that to them or being kind of vague about what it's going to cost. How do you deal with those situations? How often do you see that?
Wow, how do I deal with it? I get really upset personally because misleading people, being deceptive, leaving information out, that just makes you a dishonest person.
Mm-hmm.
And unfortunately, there's a lot of lenders that still do that. I told you, I showed you that one. There's a loan estimate, which is a legal document that a lender is required to provide a buyer when they issue loan disclosures. There's a fake document or a non-legal document called a fee sheet. Well, a lot of lenders like to still use that fee sheet because they're not legally obligated to honor it. So this veteran who'd never bought a home, 65 years old, wanted to buy a house. His family was going to help him out with a down payment. On the closing costs, excuse me. And next thing you know, he gets his fee sheet and he's like excited. He sends it to me. He says, yeah, this lender's not going to charge me any fees. I said, really? The title company's going to work for free?
I've heard some. Yeah, I've heard about some of those lenders.
The underwriter's going to be free.
They say
The
no
processing's gonna be
fees,
free.
no fees for veterans, right?
Yeah.
Yeah, they market towards that.
And it's very deceptive. And unfortunately, right now with the CFPB being pretty much gutted, these lenders are getting away with it. And these buyers are walking away thinking they got a good deal, only to find out on the day of closing or a week of closing that, oh wait, they have to come to the table with an extra $5,000 or $6,000 to meet that dream that nobody told them about.
And maybe they don't find that out until like a couple days before closing.
It happened to me on my first house. My lender didn't tell me about certain fees, and when I get there, I'm having to go back to the bank and pick up an extra $3,500.
It's all about setting these expectations, and so, it's so crazy to me that lenders do that because their whole business and career depends on, I would think, repeat customers and referrals. But if you give someone a bad taste in their mouth, they're not going to send anybody your way or come back to you. I mean,
well, here's how it works, Robert.
Unless some of these lenders are just working off a ton of leads that they buy. I don't know.
There's a reason that most lenders are only doing 1 or 2 deals.
Yeah.
Okay, that's number one.
That's one of the
Number
reasons.
2, a lot of these retail lenders, they work for this large mortgage company, and that large mortgage company has created some sort of financial relationship with realtors or brokers, real estate brokers, and so now they think that they're getting all of their business. Well, what ends up happening is they're selling such a crappy rate. They're selling such a crappy product. They don't care because that's all they know. And so, famous line from almost every real estate lender: I don't sell rate, I sell service.
Yeah. Yep.
That's horseshit. The reason you can't sell rate is because you can't sell rate.
Yeah.
I mean, that's like marketing to veterans going, hey, we've got a no down payment program. Yeah, of course. Every VA loan is no down payment.
So I want to briefly talk about the difference between a mortgage broker and a mortgage banker.
Okay.
Most of these lenders are bankers, not brokers. Brokers are becoming a little bit more common, but I think last time we spoke, you said brokers are about 20% of.
It's shifting. It's in the high 30s or mid 30s right now.
It's becoming more
Percentage.
popular. I think a lot of lenders like yourself switched over to being a broker after some time, seeing how bad the rates got, how competitive the market was. It just made sense, right?
Well, between January of 2024 through June of 2024, I lost more business. This is business that not somebody that was thinking about buying a house. These were contracts in the office, in underwriting, approved, getting ready to close, things like that. I lost more deals than I closed because rates were so bad at my lender. And that's the problem, in my opinion, when you have these real estate agents and these brokers that have a relationship, whether they like each other or they're just friends or whatever the case may be, some sort of marketing relationship. That real estate agent, in my opinion, if I'm correct, they have this fiduciary responsibility to the buyer, but yet instead of recommending they shop around, they recommend their one lender. And that one lender is only offering one rate stack. Whereas if they want to apply now with another lender, they got to go do the entire process all over again, send documents all over again, go online and log in again, get another credit report hit again. And do you think they're going to do that more than 2 or 3 times? No, they're not. It's just not realistic. Whereas if they send it to a broker like me,
It's a long process just applying.
I just do it once.
Yeah.
And I can send that entire loan application and that loan scenario to 165 lenders with one push of a button.
Yeah. That's what I wanted you to talk about, like the options right now you have, the resources you have as far as lenders.
I can smoke anybody. I can beat the tar at anybody.
Yeah.
It's not, and I can offer them that level of service that I think they deserve. I mean, buying a home is not an easy process. But yeah, that's why we answer the phone at 10 o'clock, 11 o'clock at night.
When I first got into business, mortgage brokers weren't as popular, and everything that I heard from them, any transaction I had with a mortgage broker, was not as smooth as some other lenders for one reason or another. I think the process has gotten a lot smoother because I've worked with more brokers since, like yourself, and I think it all just depends on the person that's leading the charge, which would be you and your systems and you have your processor that you have been with for a long time. So your staff as well, right? I think it all depends on that as well.
I look at anything. I mean, we were all new at one time. We all just got started at one time, at one job, anywhere. But if we don't have resources to go to for help, doing that job well becomes much more challenging. When I moved to the broker world, I knew that even though I had 13 years of experience and surrounded myself with people that had 20 and 30 years of experience, I needed to partner with a broker group that was highly successful. Our team does 5 to 6 billion a year with a B in funding. We're one of the number one clients to United Wholesale Mortgage. We do what we do because we do it really well and we do it consistently.
Yep.
We wouldn't be able to recruit top tier loan officers. We wouldn't be able to close that much volume if we were average, which unfortunately most lenders are. They make a lot of money because they have a lot of layers.
Yeah, so when the market got really, really hot after COVID, I saw a lot of new realtors get in the business, and I'm sure you saw a lot of new lenders get into the business. Since the market's become a little bit more competitive, we've seen both sides kind of drop out and leave the industry. What's your take on that?
What I read recently, maybe 6 months ago, is that about 40% of loan officers had left the business.
Mm-hmm.
That's not a bad thing. Attrition is not a bad thing. In an industry where you only get paid if you do your job well and close a deal and get referrals from those clients.
Yep.
That's the world we're in.
Mm-hmm.
So to be able to survive in this industry and do well right now is a testament that most of the people that are still around are skilled. When real estate was booming during COVID, I had realtors call me and ask me how to fill out a contract, and I can't legally tell them how to do that.
That's insane.
And my comment would be, have you called your broker? And their comment was, my broker didn't answer the phone. And again, most of those people are gone too. So again, the people that are in our industry right now are very competent. And if I look at who they do business with, I think it's a disservice and an injustice when they don't refer business, clients, families to a broker. Why would you want your buyer to only see one rate option instead of 165?
Mm-hmm.
How is that helping that buyer?
Good point. And to that point, are there some buyer programs in general that buyers are not taking advantage of right now? Maybe loans that should be utilized more for one reason or another? Anything come to mind?
My go-to is always USDA. USDA is a product that is specifically designed for people that have very good credit, very low debt, that are willing to live outside the city in what is considered a rural area. Well, in a city the size of San Antonio, outside of 1604 is considered rural.
Yep.
And so this is a program for normal people, not veterans, normal people, to get a home with no down payment. It's a very strict program. It takes a very skilled loan officer to put that together and get it done quickly, because there's a lot of government oversight on that quality of that loan.
And they became stricter on everything, right?
It's a very difficult loan.
I used to do a lot of those loans when I first started. I thought those loans were amazing. I mean, and that was 12, years ago or so, 10, 12 years ago when I was doing a lot of them. And the city was a little bit smaller then. So really talking about right outside Section 04, it's grown and more of the city's been annexed in now. But I mean, over there by 90 and 410 area, there's some pockets.
That Alamo Ranch area used to be
Alamo
USDA.
Ranch, yeah.
I don't know if it still is anymore.
Big time. Some of it's not. Some of it is out there. Northeast or far east side, there's a lot of pockets out there. Converse area, even up to 81 at one point. There was some good options.
Just on the other side of Boulevardy, I think it was.
Yeah, and so man, those loans are so popular. Because if you can get into a loan 0 down and we can get your closing costs covered.
And it's lower mortgage insurance and it's a better rate.
Mm-hmm.
I mean, it's the best of the best, except
lower taxes too.
You can't have a lot of debt. You have to manage your finance very well.
They've got real strict on those with the debt.
I think that's the number one.
Well, it's income restricted too, right?
Yeah, there's some limits. I think that there's a lot of programs that are in the city or in the state that I think people are averse to using.
You told me about a couple of city programs.
Yeah, the number one my favorite is the San Antonio HIP program. Mm-hmm. I mean, I was able to get this family $30,000 of down payment assistance.
You've done that quite a bit this year?
I haven't done many because it's you have to meet a certain income level. B, if you have family size, you have to make sure that nobody else in the family is working. So they look at that. They look at the bank statements. They look at everything. They're very meticulous on making sure that buyer truly meets the requirement. But then there's other restrictions on the property. If the seller is unwilling to do the repairs listed on the inspection report, the city will not grant the money.
That's a little bit different program. And so I've been a part of a couple of these HIP programs as well. And the lender does look at the inspection report, which is not normal.
No.
Lenders do not look at the inspection report in a normal transaction.
And
but
it was helpful because this house was a brand new home.
Oh, I mean, shit.
Brand new home, inside city limits, under $225,000.
It probably still had a couple of things.
And here's the cool thing.
Because we know brand new houses, these days.
Here's the cool thing. At $225,000, what we did was we were able, because he had really good credit, we were able to just do, I think the closing costs were minimal, I think at $7,000 because we waived escrow.
Oh, okay.
And the seller paid some of those. So we really only had to use about $5,000 of the $30,000 from the city. So we took that remaining $25,000. We got them something like a 4.8 rate. And on top of that, almost 10% equity as a down payment.
Oh, that's awesome.
Yeah. They ended up financing a loan, I think, for $218, $217, or $216. I think it was a little less. Yeah. It was a good deal. And I wish I could do more because it's such a good feeling to know that their city has programs really meant to help people.
Yeah. Yeah. And so when people talk about or ask me about first-time buyer programs, I mean, that's one of them.
That would be the number one that I would lean on.
That's number one. And I believe does that program have certain restrictions on the neighborhoods or area of town?
Inside city limits is number one. Has to be inside San Antonio.
Yeah.
The number two, obviously, is the inspection.
Yeah. I would think the house has to be in decent condition, livable condition, not have too many repairs that need to be done, because that's a big thing. Right now we're getting a little bit more repairs done than normally because the sellers are just kind of doing whatever. You can ask for a number of things, and so if this is going to sell somebody's house, they're going to be more open to it.
Yeah.
Especially if you're explaining that from the get-go. I've had a couple of buyer agents on my listings come to me and say, hey, they're doing this HIP program, this is how it works. And I'm like, yeah, I know how it works.
It's awesome. I mean, it really is a game changer product. When you look at what people are able to do with that program, or even with the down payment assistance program through TDHCA or TSHAC or even Seth, The downside about those programs is the state dictates the rate. So if they have really good credit, what ends up happening is they lose out on that better rate they might have qualified for.
Yeah.
And so, but again, I look back and I say, well, hell, if I had known about that program when I bought my first house, I would have used it.
I was doing a lot of those loans too. Mostly the bond option.
Yeah.
Because it had a little bit better rate than the grant. But of course, the bond you pay back at some point
Right.
whenever you pay off the house
Or sell
the house, which recently happened with one of my past clients. And I think at that time they borrowed like $5,000 or $6,000, but they had made so much money through the equity that it really didn't affect them too much.
I have the inverse of that. Buyer bought during COVID, used down payment assistance. Well, now he's been struggling financially because his partner moved on. So now he's in the home by himself, and he wanted to refinance, and he was inside that window of having to repay back all the money he took. So he had to.
Yeah, sometimes there's a forgivable.
And so he was upside down, and he didn't qualify.
Yeah.
And it's pros and cons, right? You want to look at everything. You're not going to ever know how to solve for everything, but at least we still communicate. We're still looking, and when we can, help him. You know, what I'm worried about, or what I'm watching, is not so much what rates are doing, because that's just math. I'm more concerned with buyers feeling confident that when they're buying, they're not overbuying or overspending and putting themselves or their family in a bad position. So we will talk a lot about their finances. You know, I had one family, they were talking about in our conversation how their son rides motorcycles professionally. And I've ridden bikes, and I know it's expensive. And so I was talking to them, and they're like, yeah, you know, after we buy the house, Mom might quit working because we have to take care of our other kids and travel. So we ended up looking at some different options, and they ended up buying a house outside the city, a little less expensive, a little lower taxes, a little more affordable insurance, and now that was money they could set aside in case of an emergency fund. So it's just little things.
That's good.
Yeah,
that's really good. I mean, to your point, no one should really max himself out when it comes to buying a house.
It's scary.
Because you might be in a situation where, I mean, you wish you didn't. You know, for one reason or another. Yeah, the people that bought at the top of the market and have to refinance right now or sell right now, it's tough. I mean, you may have to owe a little bit selling your house or look at some other options, maybe renting it out.
You know, there are options, right? You can rent it out. You know, depending if there's any equity, we can look at a HELOC. Heck, I've got lenders that will do HELOCs down to $50,000 in Texas, and it's helping some of these people get out of debt, get rid of some of their credit card debt that's eating them up at 28, 29% interest, and so they're able to capitalize on some of that wealth. But it's a challenging time because of all the negative news. But it's literally the best time to buy a home right now.
Yeah, I see people more and more these days looking for the best deal and always asking for, you know, they've always asked for, hey, you're going to give me a deal, right? If I go with you, you're going to give me a deal. And I'm going to definitely fight to get you a deal as much as possible. After COVID, you couldn't do much negotiation. There wasn't room for that. If anything, you just really had to set the expectation and say, hey, you're going to look at overpaying for mostly every house that you try to purchase. And they didn't believe it until we started putting in offers, and I started showing them, hey, like, this is really happening. Then they started talking to friends and family and found out, okay, you know, this is really the type of market we're in right now.
There was no history of when that's ever happened.
No.
You know, we've seen upward and downward trends. We've seen high interest rates in the past. We've seen where housing sales prices have, you know, maybe flattened out a little bit. But when it comes to the actual market changing so dramatically where everybody wants to buy a house at the exact same time, that'll never happen again. And I think this is that rebound effect of the market slowing down that I really wish people took advantage of. You're just not going to get a deal like that, like today, in 6 months or a year. It's just not likely. I mean, let alone the rent that you just paid for another year.
Yeah, I definitely see that. I think this time is a lot like after the big crash in '08. People started buying a little bit. More so like in 12 and 13. And the market had just kind of started coming up just a little bit. But they really didn't see, they really didn't see a whole bunch of recovery from the houses when they dropped. But they knew in the long run, just by the history of houses and the history of values, that eventually those house prices are going to recover. And so people that bought back then are sitting way healthy now.
Oh, yeah.
I
look at the house.
They may have already sold and bought again.
I bought a house in '07 for $165,000. By the end of 2010, it was appraised at $130,000. I mean, I was in panic mode. We had literally lost $30,000 over, 3 years?
Mm-hmm.
But when we ended up selling, because we held on longer, we didn't panic. And plus, I mean, where were we going to get another home, considering we're upside down? We ended up making almost $50,000 when we sold it because we held out. And that's what I think the biggest information is that long-term trend will always shift. It will always go up a little bit, always come down a little bit. COVID, that just will never happen in our life again. It just was such an anomaly, such a blip, that it's almost not worth talking about because it's not reality. The reality is right now, with sellers giving away money to get out of their house because they have to. Man, I just wish I wish the news would pick up on that.
Yeah.
That it is the best time to buy. You can negotiate a better rate. You can negotiate a better deal. You can use some of that money to buy down a better interest rate and walk away with a house that isn't going to cost as much as it will in a year.
Mm-hmm.
But they don't want to talk about that.
Yeah, if you look at the trends, it says it all, right?
Mm-hmm.
Just like the stock market, not every year is going to be up. Some are down,
Right.
but the average is going to be 10 to 12%. A lot like the housing market. I mean, it's the success of a lot of millionaires these days that bought real estate back then and continue to buy real estate now because they know it's going to continue to go up. So I think if people want a deal right now, they should definitely be buying.
Well, it's a simple rule. You buy in a seller's market and you sell in a buyer's market.
Mm-hmm. That's for sure. And these last couple of years, it's been very steady. Maybe gone up a little bit depending on the neighborhood, but for the most part, it's been very steady.
Unlike your mic.
Yeah, it's better now.
I think one of the other things that's important to talk about is the other pieces of home ownership and of a mortgage payment, which is really your taxes and your insurance. This happened to me. This is my insurance renewed. We paid it, not paying attention. And then when I realized what I had paid, I shopped around and I overpaid my policy by almost $1,000
Mm-hmm.
for the exact same coverage.
Did the same thing.
So I canceled. I paid for the new policy and I got refunded. So there's a lot of things that even somebody that is in this business forget to do.
Yeah.
I have on my buyers when we close, we have little anniversary reminders. And I'll pick up the phone or I'll send them a text and ask them, "Hey, have you set up your homestead?" I have one buyer.
Yeah.
I've been hounding him for a year and a half. He still hasn't done his homestead. That's a tax deduction on his property tax bill.
Yeah, some good news about that is that a lot of people will forget to do their homestead, but the county will actually go back 2 years and refund you for up to 2 years if you haven't filed. So definitely should file your homestead. It's a huge discount on your taxes. And then, like you said, check your insurance every anniversary make sure it's not going up. I mean, typically the insurance companies send you reminders, right? But I mean, if they're sending you stuff through the mail or email, sometimes it gets lost and everything you
here's the
get.
other side of it. I mean, even with me, with all the little things that I've got to block or minimize junk mail, you get 5 letters from the insurance company and they all look the same. You might not open all 5.
Yeah.
And then you realize, oops, I just overpaid by $900 and wasn't even paying attention.
Yeah, those premiums are definitely going up every year. It's no joke. You have to shop every year, I feel.
You really do.
Yeah. Are there any common myths you see for Govy loans, like an FHA or VA loans, that people just don't know about, or people commonly question you about when it comes to those loans?
I think the biggest myth is that VA loans require an escrow. They don't.
Yeah, we could talk about that.
A lot of mortgage lenders will require that do VA loans and profess to be VA experts don't tell the buyer that it's not required. And that's because their lender will not allow them to do it. That's the problem, again, with when you go with one lender. Mm-hmm. One of the people that we've had on our show was referring to one lender that they use when they refer out business to. Mm-hmm. That lender requires veterans to pay an escrow when it's not required. So why would they do something that's not required? It's because when they sell the loan, they get paid more money. So it's about them, not the veteran.
Yeah, and the escrow account, they usually make you put up 3 months of taxes, right?
Correct.
So if it's like 400, 500, 600 in taxes, I mean that could be
$600 to $800 a month times 3. Now you're looking at an extra $1,800 to an extra $3,000 in closing costs.
Yeah, and if you're
that took away money that you could have used to buy down a better rate.
That's what I was gonna say. Yep.
See the scam now?
Yep, for sure.
And again, these people that are only looking at these one shop lenders, they're really shooting themselves in the foot, and it's sad. I've got a buddy of mine that's a broker, and he shifted out of the retail lending into broker lending about 2.5 years ago. 2.5 years ago, we were talking. He said, "Yeah, I was doing maybe 2, maybe 3 deals a month." He said, "I'm doing 15 to 20 now."
That's insane.
Yeah. Because he's got the word out and people are listening.
So I want to switch gears a little bit. What do you think is hurting buyers from buying right now as far as credit and debt?
Debt's really the number one right now,
Okay.
because a lot of people have racked up credit card debt and it's hurting them.
Yeah.
It really is. Mm-hmm. I don't see a lot of those buyers. Most of the referral partners that I've worked with are really finding more of the high score, high income, low debt buyer.
Okay.
Like that couple that we did the loan with that got the HIP grant. They had one credit card for like $25 a month. They had 5 kids.
Wow.
So they lived well within their means. I mean, dad was the only person working in the household. It wasn't easy. But they found a way to do it. But they weren't out driving $800 or $900 car payments.
Yeah, really budgeting, right?
They were super conservative.
Yeah,
I mean, she made his lunch every week.
You got to budget these days.
She made dinner every day, but that's because she stayed at home with the other kids.
Yeah, cooking from home and saving
all
where you
those
can.
little things may add up, and I'm not saying it's easy. It's not.
It really does.
But it does help.
Every little thing adds up.
I think that's one of the big myths is that all loans require an escrow. Conventional loans, as long as you're putting 5% down on a conventional loan, you don't have to have an escrow. But yet every lender that you talk to will tell you it's required.
Yeah, I haven't heard a lot of that either. I knew about VA loans because of you, but not conventional.
Yeah, it's huge. Again, it gives you more opportunity to buy down your rate or come to the table with less money and afford the house that you really want.
Yeah. So we know debt's a hurdle right now. What about credit scores? If they have a lower credit score or something that doesn't meet the minimum, do you have somebody you're sending them to? Are you able to look at something to recommend them do something?
So there's a couple of ways we'll approach that. If they're in oh shit, I got to buy now. Yeah, I've got lenders that'll do that deal, even down to a 500 credit score. they better have a ton of money to put down because it's going to be an ugly loan. I'm not going to lie.
Yeah, rate's going to look ugly.
Everything's gonna
more
look
down
ugly.
payment.
And it's going to be very invasive on what they're looking at.
Okay.
If there's somebody that maybe they're 3 months and willing and able to wait, I'll look, because I've got a little bit of background after 20 years in collections, where I can look at that credit report and work with them on my own and see if we can move them 10, 20, or 30, or 40 points to get them the rate that they might need to qualify for the payment they need.
Yeah.
And then, again, with some of my other lenders, we can leverage relationships and try and get them a better rate. If it's somebody that we look at and go, wow, they're really, that's going to be work. I mean, you damaged your credit for 3, 4, 5 years. We're not going to fix it in 3 months. Then we will refer them to a professional, to somebody that is experienced and able to put in the amount of time that it's going to take to change that score around. I mean, there's that one gentleman that we both know, the plumber that we work with. When he first applied, I think he was, what, 560, 540?
Somewhere in the fives. Yeah.
And the other day when I spoke to him, he's now 780. So there's a lot of ways to make it work, but it took him almost, what, 6 months, 7 months?
I think it took about 6 months.
Yeah.
Yeah.
I mean, it's doable, but if you did a lot of damage, it's going to take time to recover. But yeah, there's a lot of people that we will work with and try and fix ourselves. And if not, we will definitely send them out to a pro. Same thing with you. I mean,
Sure.
if you meet somebody and they're struggling and they'll tell you up front, I want to buy a home, but this is what I've done.
So I just got a couple more questions for you. Just some hot topics. What would you say something specifically about mortgage brokers that buyers don't know? I mean, we've touched on a lot so far, but is there anything else that you specialize in as a mortgage broker that buyers don't know?
Yeah, I mean, I can do commercial lending. I'm working with a realtor partner. We're looking at some foreign investors in another country and possibly flying down and having a meeting. They want to buy apartment buildings that start at $2 million and probably cap out at about 10 or 15 million. And so I've got a lender that will loan up to 100 million.
Awesome.
Yeah. Let's see what hard money loans we have access to. So for investors or flippers,
How do those work?
it's actually the easiest loan out there. So let's say you wanted to buy a home. You've already got some background experience in flipping homes. Your go-to guy might offer you 10% down, but they want a 3% fee and a 10.9% rate.
Okay.
Well, I've got so many hard money lenders, I can shop it to all of them and then have them compete against each other. And while they're competing against each other, now I'll still get you that 10% down, but maybe I got you a fee that's 1% lower in fees and a rate that's 2 points lower. That's the leverage of being a broker, is they know that we're shopping them when we throw out that scenario. And it's real easy. What we do, we take all our lenders, we build the scenario, we blind copy everybody, and we put out the scenario. I get all the responses back, and we start to filter through them. And then I might go, okay, look, these are the best 3. Hey, Dominic, I've got this guy. He's competing with this other guy over here. You know, I need you to give him a better deal. He wants to send you more business. He did 5 in the last year. He's probably going to do 5 this year. Help me out. And they will. Because hard money is different than traditional lending. They can do whatever the hell they want.
Yeah, and it's mostly for people that are doing short-term
Business
loans.
to business loans, yeah.
And after you do a couple of them, like you said, they get better deals, right?
Yeah. So that's, I think, something that people don't realize that brokers have access to. And not all brokers, because there are very small brokers that might only have 3 or 4 lenders, maybe 5 lenders. A buddy of mine owns a shop. He's only got 5 lenders. He doesn't care. He doesn't want 165. It takes a lot of work to build those relationships. But he doesn't do commercial lending. He doesn't do hard money lending. He doesn't have access to those products, so he has to send them to me.
Yeah, so you're getting deals referred to you by other lenders.
Yeah,
Other
yeah.
brokers.
Yeah, it's a good problem.
That is cool.
What else is
and
out there that we're doing? Oh, foreign nationals. That's a big one.
foreign nationals, I was gonna say, yeah.
We just did one with a foreign national. They put 30% down, and all we needed was their CPA letter from their CPA in Mexico that indicated that they had the ability to repay. And we were able to close on that. Yeah.
Wow. So they didn't need anything else, huh?
There's a few other pieces. I mean, we need to see their passport, and we need to make sure that they have the ability to travel into and out of the U.S.
Those ones are usually 20 to 30% down.
Yeah. I mean, there's some that are as ugly as 50% down, but they'll do it.
Wow. Yeah, I bet there's a lot of people that think they can't buy, because I know there's some programs out there. I've heard of them before for foreign nationals, but those can be a little tricky.
Yeah.
You need a lot of money down, right? Good income, good score.
Especially if it's a foreign national buying a.
Do they have credit
commercial loan.
scores?
If they've got some sort of residency here and they've made an effort to establish some credit, yes. I've met some foreign nationals that have moved here, that are legally here, and they've never established credit because that's just not their culture. They pay everything cash.
Yeah.
And so when you look at their credit report, they're blank.
Yeah, they're blank, but they can still.
We can help them.
Still
Yeah.
help them. That's cool. What about bank statement loans, self-employment loans?
I'll use myself as an example. So most lenders are going to tell all their referral partners, all their customers, you have to have 2 years of doing whatever you're doing for your income to count.
We hear that so often.
Yep. Guess what? It's not true.
Yep.
Shocker. So right now, if I wanted a HELOC loan, most lenders would tell me, sorry, we can't do that deal. You're going to have to go to a bank or a credit union. Well, I can do the deal. Because guess what? Even though I switched over a year and a half ago to 1099, that lender only wants the most recent 12 months of 1099 income. So I don't have to wait 2 years. I could literally do a loan for myself today.
Yep. Usually I've seen a lot of self-employed people do 1 year, maybe 1.5 years,
Yeah.
or something like that. It doesn't necessarily have to be 2 years. And then especially when you've been in the industry for, over 5 years or so, that's typically they can take 1 year tax returns too on those.
I could literally have been a one. Oh, are you talking about I know what you're talking about. So
Self-employed.
when somebody is self-employed, if they're doing a Freddie or Fannie Mae loan and they've been self-employed in that same industry and it can be confirmed for 5 years or more, then we only need their most recent tax year.
Yeah.
So what you'll get some self-employed people to do that are smart or aware is they'll call me in October and ask me, how much income do I need to earn to afford this much house?
Mm-hmm.
And we know what that means.
Sure.
They're going to make sure that their taxes are correct.
Yeah. That's awesome, because I hear so many people that are getting the wrong advice about this 2 year thing. And that brings me to my next question. What is some common advice that's outdated or just wrong besides that?
I think my best advice to everybody right now is, if you want to buy a home, whether it's today or this year, get on the phone with you or me.
Mm-hmm.
It could be a 5-minute call. It could be a 30-minute call. It could be a 2-hour call. I don't care. But I guarantee that if you really want that home, I'll help you get in it.
Yeah, you'll find a way.
It's not hard.
Yeah.
It's just work.
Yeah, you've always been real flexible with different buyers in the past, whether it's a credit issue or income issue or a debt issue. Yeah, there's always a way to do it, even if it's not right now.
Right.
You can plan for it.
There is. Again, it's all about a plan. It's not about an idea.
I guess the last question I have for you is, I already know the answer to this question, but what would you say to some buyer that's waiting for the market to crash?
You can shit in one hand and wish in the other and see which one fills up first. At the end of the day, it's just a crapshoot.
Yeah.
There's no other nicer way to put it. Hoping the market crashes. Okay. So the last time we had a recession, interest rates went down. and buyers hit the market. So waiting for the market to crash isn't going to help you. It's going to hurt you. If you're thinking that housing prices are going to suddenly drop 10%, well, if you can't afford $500,000 and you're only wanting to afford $450,000, well, how many other buyers are going to be wanting that same thing right now? So that competition is what drives the deal. Yeah. This perception that there's going to be this correction because somebody on TikTok said so. I mean, again, good luck.
Yeah.
You know, while you're renting for the next 2 years and dropping $50,000 in rent, somebody made equity on a home and bought today.
Yeah, I believe that too. I definitely believe that. You always get the best deal when you buy low, sell high. And right now, houses are, getting sold for probably the least they have in the last couple of years.
I'm just going with the fact that
and then
the closing costs. You can't. If somebody was to walk up to you right now and say, "Hey, Brian, I'm going to give you $15,000," what do you say? No.
Yeah.
Oh, and I'm going to give you an affordable price for a house. No. But you're renting for $2,000 a month in an apartment. Why?
Yeah, and if you're looking at a 5% versus a 6% rate, how much is that really saving you a month, right?
$80, $100.
Yeah, so look
on
at
an
that.
affordable house. Yeah.
Look at a yearly basis versus, how much
the rent you're paying,
how much closing, how much closing costs you're getting now versus maybe not getting. Buyers that haven't bought don't realize how competitive the market was, that year after COVID or the COVID year when the market got really hot. They really don't realize how hard it was, how tough it was, how expensive it was. And so I think if they knew, anybody who bought in that year compared to now, like people that are actually looking to buy again, and they went through that, they understand exactly why it's a good time to buy right now.
I never want that market to come back. Yes, I did more business.
It was terrible.
I did more business and I made more money. But I would be working on the same deal 7 different times in one day.
Oh my God, yes.
To do a new letter.
Mm-hmm.
And it was uncomfortable because how do you tell somebody that it's a good deal to pay $40,000 over the asking price or $50,000 and then tap into their nest egg, their retirement? I couldn't do it in good conscience.
Yeah, I feel bad for some of those buyers. We just couldn't get away from it. Everybody wanted to buy.
Yeah, I know.
And so it was just what it was. What it was. The last question I got for you is, who should not buy a house right now?
Ooh, that's an interesting one. Who should not buy a home? If I am working for somebody or working for myself, and I think I'm going to be leaving my home or my city or my residence in the next year, I probably wouldn't buy. If I've gotten multiple job offers and I'm thinking that I might just wait out the rest of the year or wait out till summer, I probably wouldn't buy now. If I've got a major life issue going on, I've talked to couples that, they're arguing and then one of them will call me and say, "Hey, look, we're really thinking about getting divorced." I'm gonna not tell them to buy a home.
No, of course not.
I'm gonna explain to them what the consequences are if they do. I've got another one where 3 friends that had been lifelong friends wanted to buy a house together. Well, my first question during our conversation was, do any of you have a fiance or a boyfriend? And one of them did. She has a fiance. And I said, are you okay knowing that that young man might be at the home when it's your home too? And they really sat down and they thought about it and they decided not to buy together because they realized there was a lot of risk that they hadn't considered.
Yeah. Yeah, I like those questions. You really walk them through the whole process and ask the questions you need to ask to see if they're a right fit to buy. There are some people that shouldn't buy right now for one reason or another. So
If my job
I like that you do
is so
that.
much in jeopardy
Yeah.
that I think it's going to end, man, I would not go into a high risk situation. It's just not worth it. Not.
Cool. Well, Carlos, thanks for taking the time
Appreciate
and
you,
talking
Ryan.
to us about mortgage and rates and the market right now. I wanted to do this again because we hadn't really talked too much about this stuff.
We've had a lot of guests.
A lot of
recently.
guests, yeah. I've had a lot of guests recently, so I think it's some good information to recap. Anything else you want to lead off with?
No, my big thing is always going to be if you want to buy a home, just talk to somebody. Call me, call Ryan, DM us. I mean, it's just worth a chat. Why not?
Yep. So many people are scared for that initial conversation because they don't want to get rejected or feel like feel invaded,
No.
because you're going to ask for so many things, and you're going to have to pull their credit and see what their financial situation looks like. And I get it. I understand it completely, but I mean, what you don't know is what you don't know, and there's no other way to, start this journey without applying
You
and
got to
talking.
cross that bridge.
Yep. So, well, until next time, guys, appreciate you tuning in. We'll see you.